Hey everyone, and welcome to this explainer. Okay, let's dive right into this. Today we're unpacking the absolutely fascinating story of Nigeria's digital asset landscape. It is literally a tale of survival, grassroots innovation, and some seriously intense friction between a government and its people. Nigeria is a crypto paradox. That quote perfectly hits the nail on the head. It captures the exact tension we're going to explore today. On one hand, you've got a state that is deeply afraid of cryptocurrency. They're terrified of capital flight and losing their grip on monetary control. But on the other hand, it's home to a population that relies on crypto more than anywhere else on Earth. So, here's our roadmap. First up, the perfect crypto storm. Second, when P2P replaced banks. Third, we'll look at the 2024 Binance crackdown. And finally, navigating the new rules. Let's get right into it. Section 1. The perfect crypto storm, unpacking the world's highest crypto adoption rate. You see, Nigerians didn't just wake up one day and choose crypto for the fun of it. Economic necessity basically chose it for them. Check this out. A staggering 47% of Nigerians own or use cryptocurrency. That's almost half the country. It is the highest adoption rate globally. So how in the world did this happen? Well, you have to look at the demographics. We're talking about a massive population where 70% are under the age of 30. They're super tech savvy, they're dealing with 33% youth unemployment, and crucially, 90% of them are walking around with mobile phones. For a lot of these young people, crypto literally became their very first real bank account. And it's all built into a pretty harsh economic reality. By 2024, inflation hit a massive 34%. To put that into perspective, the local currency, the naira, lost 70% of its value against the US dollar since 2020. Holding on to naira simply meant watching your money evaporate. But at the same time, holding actual US dollars was heavily restricted by the Central Bank of Nigeria. So citizens desperately needed a reliable alternative just to preserve their hard-earned savings. Which brings us to what they are actually buying. And this is key. 85% of Nigeria's $56 billion on-chain volume is not in volatile assets like Bitcoin. Nope, it's in stablecoins, specifically USDT on the Tron network. This isn't about risky speculation or trying to get rich quick. Nigerians desperately want price stability. They don't want volatility. They just want their money to hold its value. And this brilliantly illustrates another absolutely massive use case: remittances. The Nigerian diaspora sends back around $20 billion home every single year. Now, if you go through traditional methods like Western Union, you're getting hit with roughly an 8% fee. But if you use Binance peer-to-peer crypto networks, that fee plummets to just 0.5% and the transfer is done in like 5 minutes. The market simply looked at the options and chose efficiency.
Section 2. When P2P replaced banks. The 2021 Central Bank Circular. So, what actually happens when a government tries to step in and cut off access to this incredibly efficient tool to maintain control? Let's trace the timeline.
The tension here escalated really quickly. It started with some central bank warnings back in 2017, then jumped to the 2020 NSARS protests. Activists were getting their bank accounts frozen, which basically forced them toward uncensorable crypto networks. And this whole thing culminated in 2021 when the Central Bank of Nigeria officially banned banks from touching crypto altogether. Literally overnight, local exchanges lost their bank accounts. The immediate fallout? The naira dropped 10% in a single week. But here's the thing, crypto adoption didn't die out. It just adapted.
So how did they pull this off? Here is exactly how the market adapted, using a clever peer-to-peer or P2P workaround. Instead of depositing money into an exchange, a buyer sends naira directly to a seller's personal bank account. Binance just sits in the middle and acts as an escrow, holding the crypto until that bank transfer is confirmed. Because think about it, you really cannot easily ban simple bank transfers between two individuals. This brilliant little system turned Binance into Nigeria's biggest unlicensed bank, eventually processing a mind-blowing $1 billion a month.
Now, right around the same time, the government tried to offer their own alternative, a central bank digital currency called the naira. But despite the fancy tech, it saw less than 1% active adoption. Why? Well, it all comes down to trust. If the physical naira is inflating at 30%, the digital naira is going to inflate at 30% too, right? On the flip side, the market overwhelmingly chose USDT because it offered direct, reliable access to US dollars. You just can't compete with the dollar simply by digitizing a currency that's losing its value.
Section 3. The 2024 Binance crackdown, when crypto meets currency war. This is where things get wild.
It's the dramatic collision between a collapsing naira and a booming crypto market in 2024. 1,900 naira to one single US dollar. That is what the exchange rate absolutely plummeted to. The government pointed the finger at Binance, blaming them for manipulating the FX rate, and ultimately forced them to exit the country entirely. But you know what the data actually shows? After Binance was essentially kicked out, the naira kept falling. It dropped even further to 1,900. It really proved that Binance was just the thermometer reading the temperature of a sick currency, not the virus causing the fever.
The events of this crackdown were, honestly, severe. In February 2024, the government outright blocked the Binance website. Binance executives were literally detained in the country, and rumors of a staggering $10 billion fine started circulating. Ultimately, Binance halted all naira services and packed up. But here's the unintended consequence. The demand for dollars didn't just magically vanish. Instead, all that P2P trading simply shifted into much riskier, completely unregulated channels like WhatsApp and Telegram groups. Sadly, this ended up pushing everyday citizens straight into spaces riddled with scams.
Now, this is not just an isolated story about Nigeria. It's actually part of a fascinating, broader global pattern. When a national currency starts to fail, governments frequently attack crypto as the convenient scapegoat. We are seeing this exact same script play out right now in places like Turkey and Argentina. Section 4. Navigating the new rules. Taxation, licensing, and the reality of 2026. So, the crucial point here is the Nigerian government ultimately realized you can't just ban code forever. Let's look at how they eventually pivoted to regulation. To say the regulatory timeline has been chaotic is an understatement. It's been pure policy whiplash. In 2021, they banned banks from crypto. By December 2023, they reversed course and lifted that ban. Then, barely 2 months later, in February 2024, bam, the massive Binance crackdown happens. And finally, looking ahead to June 2025, the SEC releases official, formal crypto rules. It's a textbook example of slow policy desperately trying to catch up with a rapidly moving, grassroots reality.
Now, the absolute centerpiece of these new rules is the VASP, or Virtual Asset Service Provider. If you want to operate legally now, exchanges and brokers have to hold a minimum capital of 500 million naira. They have to secure a tough SEC license, and they must maintain a physical local office. This is a massive new barrier to entry. It's currently forcing out the foreign giants who are kind of just waiting on the sidelines for clarity, but it's also allowing local exchanges like Quidax to step right up, apply for legitimacy, and fill that massive void.
So, practically speaking, what is the everyday reality for Nigerians right now? Well, holding in self-custody, that's completely legal. Running an unlicensed exchange or trying to manipulate Forex, highly illegal, and you run a serious risk of arrest. But here is the fascinating irony. Using USDT, the absolute lifeblood of the Nigerian crypto market that makes up 85% of all volume, remains in this weird legal gray area. Why? Because the SEC rules state that stablecoins must be bank-issued. It's a total paradox.
All right, so what should you actually take away from this dense legal landscape? If you want to stay safe under the new 2026 rulebook, here's the playbook. First, use licensed VASPs. Second, if you really must use P2P, keep your trades small, under 5 million naira a month. Third, be super aware that there's now a 10% capital gains tax, so you've got to track your transactions carefully. Fourth, always stick to self-custody with your hardware wallets. And finally, absolutely never engage in posting fake P2P rates or messing with FX.
And that brings us to our final thought. You see, the Nigerian crypto story is far from over. It is literally the front line of global currency wars, evolving regulation, and unstoppable grassroots adoption. So as inflation starts hitting other nations hard, is the Nigerian crypto story coming to a country near you? Because history shows us time and time again, when human need outweighs fear, people will always find a way. Thanks so much for joining me on this explainer, and definitely keep your eyes on how this incredible technology continues to reshape global finance.